Hello guys, welcome back to the video here. It's your boy A Capitals in the building. Back on another analysis video. Now this video is going to be analysis on New Zealand USD. I'm going to go through some, some high time frames to some lower time frame charts, breaking down, market structures, supply zones, and my analysis and what I see the market going in the next few days or two, or however that the market is going right now. But however, before we start the video, guys, please like, comment, share, subscribe. Send it to your loved ones, your aunties, your moms, your grandmas, your daughters, anyone. Send it to them. Make sure they like, they comment, and they share it to other people as well. I really appreciate that. Yeah, and obviously, let me know when you guys want kind of videos you want to see, and obviously comment these in the comment section. It'd be really much appreciated as well. Now, without further ado, let's get into the video. Today, as I said, we're just going to go through some fundamentals and technical analysis of NU, which is New Zealand against the US dollar. Now, before we get into the charts, I normally tend to look at the, fundamental side and understand what's really going on with how positions are looking in terms of what positions are being taken by institutional traders or the guys that are really shifting and moving the market, so to speak, as well. So we want to get their perspective and see how they're doing things in the market, so we can understand what they're most likely to do, what they're looking to do in the next few days or two, or even weeks to come. So it's very, very important to understand the fundamentals as much as knowing the technicals and patterns and all these forex terms and stuff like that. You need to understand the fundamental aspect of the financial markets as well. But so without further ado, let's get into the COT report. Okay, now the COT report. So basically, this is a report for New Zealand, obviously NZ against the dollar, and we can see off rip here. This is quite interesting numbers we're looking at. So starting off the non-commercials, we can see the long and short positions are quite interesting. So there's about shy of 11,000 long positions and 13.5k shorts. Now, by understanding the numbers, I know the shorts is much, have much more control than the longs. Just off understanding the numbers and basic economic wise, I understand that 13.5k is much bigger than 10k, or so to speak, close to 11k or shy of 11k. So it's much more bigger. So therefore, I know the shorts or the sellers are in control of the New Zealand market. Now, we're not done yet. Again, this is where we, as day traders, we care more about the next part, which is the changes part. Which is where it gets interesting here. Now, the changes part again seems to match with the shorts and with the with the current overall market sentiment. The reason why I say this is because we have a closing longs of 5,000 plus positions and a closing of shorts positions of 3,000 plus 8. Now, what does that mean? Okay, so what that means is that what this is telling me that is that based on the current market, movements or market positions of institutional traders, they currently still have more sell positions in favorable, based on the fact that they are closing more long positions, they're closing more short positions, which therefore means that price will most likely continue to depreciate for the New Zealand market, because there's more sell positions overall, however, and there's less closing, less sell positions. Whereas if you look at the long positions, there's less long positions overall, and the changes even shows that there's much more closing of long positions to come, which means that off rip, sellers are in control of the financial market side of of New Zealand against the pound, against the dollar, so to speak. Now again, let's look on the other side of things, which is the US dollar index. So we can see the US dollar index is giving something that is representing the fundamentals, the technical side of things. So we can see here There's a 20 plus K long shorts, longs positions, and 6 plus K short positions here. Now, which already tells me that the dollar is most likely going to continue into appreciation of price, which is a good thing for the dollar. And the changes therefore shows that, even though there's, less long positions being closed and there's more short positions closed, this tells me that the dollar is very, very favorable to more long positions than short positions, which therefore means that the market for dollar is bullish overall, because longs have obviously institutional traders have more long positions than short positions overall, based on the numbers as we're seeing here from non-commercial traders, which is very, very important that you've got to distinguish these two markets. So then, what does this all mean in together? Well, what does this mean in summary is that New Zealand is most likely to continue to depreciate in price, because the New Zealand is weak and the dollar is strong. That's what this all means in layman's terms, so to speak. So now that we've done with the fundamentals, let's go into the technicals side of the market and find areas that we can enter into a short position, since we've already understood that the market is going to be favorable to short positions because New Zealand is weak and the dollar is strong. Now back to the charts. Okay, so as you know, but before we continue, guys, check out my Telegram. It's in the comment section where I normally tend to drop daily analysis on there. And obviously you can get more setups, you can get much more interaction with me. And I did post, like, I think a setup around here. I believe that I think I posted a sell setup around this area here that I believe price would, so you come to this area and push downwards, which it currently did, as we can see here. So this is, which was a good thing once I realized that price went in favor because of this nice buy to sell candle before the full push to the downside, leaving lots of imbalances and fair value gaps here. So now the next part we've got to look at is, where is the market most likely going to retrace back before we have a continuation to the downside? This is where it gets really, really important as traders here. So as traders, we have, we've got to look at multiple areas that have a lot of power or a lot of influence that cause the change in the market direction. Now, as you can see, we have this candle here, which is an order block candle. We have this area here. Now, you can argue that this area has already been mitigated by this candle, which tells me that then, and obviously price has closed below this swing here, which is a very good thing. So therefore, my next area that I'm looking for a continuation or a scale in position is this lovely order block that we can see here outside. Now, the reason why I chose this area, because first of all, we can see this is the last buy side candle that caused the price to move, push downwards and closed below this swing candle here. Once this happened, this is what we call a change of character, because prices obviously push price down, closed below this, this candle that caused a bullish run, and leaving the liquidity here, which then caused price to push up to grab more liquidity, because obviously we can see some imbalances here and some equal highs. Obviously price pushed up, mitigated that last order block and then pushed down again, clearing that liquidity again. So again, it's the same thing that we've got to look at for this candle here. There's liquidity that's going to be here that the market will need to come and sweep. And therefore, I'll be looking for a nice sell positions from this area that we have, as you can see here. So it's very, very important to understand. Now this could be our, what we called our first take profit area that we could put. So, and obviously we know that there's liquidity line just under this candle here, which means that price needs to come back and retrace and mitigate all that orders that are filled below this last wick, which is the swing low that we have here. So it's very, very important to understand, what market candles we look at and where we identify our supplies and demand zones so that we can enter and have a nice return, so, and then this area will be my first take profit area. And obviously there's a few demand zones that I'll be looking at for. So we have this last candle here, which could be a nice area. As we can see, we have like imbalance, left price pushed up, closing above the swing. It came back down, however, failed to mitigate this order block that causes the swing change in price. And therefore, you can see, so there's many areas that you could target as traders. You can even target here if you're, want a more of a safe entry type of thing. So, or safe, you don't want to be in the market for too long, so you can be in this for a nice 4-hour trade. Step your stop loss below this swing here, entry on the bottom of, or on the open of this candle, and then I'll take profit. Normally I'll put my take profit in the swing low over here, or you can put your first take profit here. But however, I will normally put my last take profit here, as I believe this is area that price could change direction and continue to the upside, even though the market is in, the hands of, sellers, because I still believe there's area of, imbalance that needs to be filled before we can see a total change or total continuation in the market. So price could even come down here, and the next area that price could even push up to would be this candle that we have here. So it's very, very important to understand where to look at the market and how to expect it. So this is my take on New Zealand USD, a nice 7R position overall. Let me know what you guys think in the comments, and what kind of videos you want me to make going forward. But it's your boy, All Capitals, and I'm out. Peace.